Coming up on the SBS On The Money podcast, the Australian share market bounces back its best one-day gain in 5 years. Ausbil's Paul Xiradis says the Trump tariff pause is a turning point. But did Donald Trump manipulate the market as the US posts its best one-day gain since 2008? All of that and more next. Hi everyone, it's your daily 10-minute business and finance news wrap for this Thursday, the 10th of April 2025. The Australian share market had a great day, bouncing back 4.54% on the S&P ASX 200 to 7,709 points. It follows a massive after Donald Trump paused tariffs for 90 days on most countries. It's the latest, which has prompted wild swings on share markets globally. And to take his view, we're joined by industry veteran Paul Xiradis, the Chief Investment Officer at Ausbil Investment Management. Paul has over 45 years' experience in investments and co-founded Ausbil, which has turned into a multi-billion-dollar investment manager.
And volatility in itself is not good, but volatility sometimes is driven because of events leading up to it, and actually then a climatic event occurs. So I think that's what we are seeing right now. I mean, we have seen a few days of volatility. We have seen markets sell off for a lot of for concerns around the tariff in particular, and also what was occurring. And what we have seen is a reaction today, in particular, because there has been some relief. That's not unusual, and that's fairly normal in these after a marked sell-off, as we have seen.
How does this volatile period compare to previous volatile trading periods that you've seen of this kind of magnitude?
Yeah, look, I mean, there has been quite a wild sell-off, right? And there has been a lot of concerns leading up to it. So volatility does vary leading up to major events, but if I hark back and reflect on previous market downturns when they have been quite severe, they tend to be driven by panic and fear of the unknown. And that's exactly what we had at one stage, and it really does feed on itself. And normally what is common in these things is that that panic does set in and people are forced to sell. People are fairly heavily invested and or leveraged, and that's what actually transcends where the market actually corrects rather quickly. You then often see notes coming out by strategists and also economists globally about justifying the move, why they've just changed their forecast and also their economic forecast to justify the move, and again that feeds on itself, and we actually normally see a downturn. But what normally happens in these periods is that logic is just thrown out the window and panic does take over. And the concerns in the marketplace just start feeding on themselves, and it really does create opportunities. I've seen it many, many times over the years, and certainly this time has been no different in the sense of the events of it leading up to it being the outcome. But what is common is that logic is thrown out the window, panic actually sets in, forced selling takes over, and opportunities are presented.
I know you don't necessarily look at the very short term, that investments are a long-term horizon, right, though? Looking at what we saw overnight, this positive move, is this a turning point, or is it wishful thinking that we're going to now recover from here on in?
Look, I mean, history will tell us in the future if it was, but my view is that it was a turning point. It was a safety valve actually released in the sense of lifting the cloud of uncertainty, in the sense of having some certainty about what the end objective is. And it certainly is that from a US perspective, is to introduce a tariff right across the board at a rate which is not too onerous, but also beneficiary to that of the US. And I think in order to get there, that the administration felt that they had to be pretty aggressive in order to bring people to the party and to bring people to the negotiating table. And exactly that's what happened. If that does occur, I think that will be a good outcome, and that will settle markets. But there still will be some uncertainty, and that's something that we need to deal with. But I think that what we'll also see is some interest rate cuts occur regardless, even if things do settle, because there is still a bit of a cloud of uncertainty, and the application of the new world that we will be living in brings in some areas of doubt and also lack of responsiveness.
How do you manage this period as an investor, and what are you telling your clients?
Look, I think you've got to see through the volatility. I mean, it's always hard to do so. But certainly the things that I say to my investors, and certainly where I get excited after these periods of downturn, is it creates a fantastic opportunity to reset the portfolio in parts, or to add to your portfolio where things have actually been sold down quite aggressively and unrealistically. It presents fantastic opportunities in good quality companies.
And one more thing just to wrap up, because you said you do see this as a turning point, right? Can you explain in further detail why you see this as a turning point?
I think the reason I was saying this is a turning point, it brings some certainty in the sense of what we know, what the we know what the end game is, in the sense of having almost a blanket tariff into the US of about 10%. It's also bringing in, or resolving some of the imbalances that are happening around the world, and bringing countries globally to the negotiating table and working out an outcome. I think that is a certainty. I think it also takes away the uncertainty as far as, if the tariffs were going to be enacted at a very harsh rate, what that meant from a global growth perspective. I think that's now been taken off the table. An example would be, there was one notable economist for a leading investment bank called out a recession just prior to the announcement of Trump, and 73 minutes later that was reversed. So that's a really good example of taking off a degree of uncertainty, and that being projected by notable commentators.
That's Paul Xiradis there from Ausbil Investment Management, the Chief Investment Officer there. A reminder there, the Australian share market up 4.5%, the S&P ASX 200 to 7,709. For more on the day's market action, I spoke with Ben Clark, a portfolio manager at
Ben, the
TMS.
ASX really taking off today, taking Wall Street's lead, up more than 6% at one stage. These are big swings. Up, we had some really big swings. Down in recent days too. What does this volatility say about the investment environment at the moment?
Yeah, look, I think it said that a lot of uncertainty had taken over markets and that fear was everywhere. And as it stood before today, markets were positioned for further bad news. The big news that was happening in markets yesterday was actually what was going on in the bond market, not so much the share market. And we were seeing a proper run on US government debt, which I think is what has forced Donald Trump's hands. But it also, to me, is a good reminder of the amount of leverage in the share market these days, but also the amount of autonomous computer trading platforms that we have to deal with and create a lot of liquidity.
When you look at the ASX today, if we run through, where did the gains come from and were there any trends?
Look, the gains were across the board. It's been a very wide rally, but in particular, it's been the growth stocks that were particularly hard hit during this correction, as they so often are. That's where the buyers have really come back into first and foremost. And also we've seen a trend where companies that have got exposure to the United States economy and are physically selling goods or services there have been hit hard recently as well, and they're having a great day today.
This obviously followed a huge rally on Wall Street. The S&P 500, for example, up almost 10%, its best one-day gain since 2008. But there is some discussion today about whether Donald Trump, the US president, manipulated the market in any way, because he posted on his Truth social media website just after the US market opened, quote, "This is a great time to buy DJT," and DJT being not just his initials, but also the stock code for the parent company of Truth Social. 4 hours later came his announcement of a 90-day pause on nearly all tariffs. And then we saw the share market surge. What are your thoughts?
Yeah. It raises a lot of questions. It's not a good look. There's a lot of questions I think that we will probably never know the answers to. And the questions have to be, why is such significant news being released in such unusual networks? But also potentially who knew about this news before it was released, and did anyone act on the news before it was released? So look, I suppose this has been a pattern of behaviour from the president in his first term leading into the current term. And you'd have to say it's a pattern of behaviour that Americans overwhelmingly voted for.
Finally, this has been a volatile period. How are you feeling as an investor at the moment?
The human side to me says I'm feeling pretty relieved today that common sense has prevailed, albeit frustrated. Often when you get these really nasty corrections that have happened so quickly, there's an existential threat or crisis that's playing out. In this case, the crisis was completely man-made. There really was no need for this crisis to have pervaded to the extent that it has. There was no logic in the crisis getting to this point. And I'm sure there's been millions of people across the world who have been shaken out of the market by the fear of what was going on that will have lost a lot of money as a result of this. So, it's an interesting time to be an investor.
There's still a lot of uncertainty to come, though. So what are you telling your clients right now?
Yeah, it's the same thing, Rick, which is firstly, sit tight. It's often the best piece of advice you can get given during this period. I think if you're a direct investor, the second thing you should be doing is looking through your portfolio and thinking about which businesses are going to be the first for money to flow back into when the market does turn. And today's probably given you a pretty good guide of the kind of businesses that fundies will step in and buy once they've got a bit more certainty about what the outlook is in hold.
That's Ben Clark there from TMS Private Wealth. Still, some economists say that the Reserve Bank may need to cut interest rates more than expected next month. Those from NAB say the evolving global environment means the RBA may need to play catch-up. It says that it should cut by 50 basis points in May now, followed by smaller rapid cuts, taking the cash rate to 2.6% by February. For more, I spoke with Gareth Spence, the head of Australian economics at NAB.
That's right, a relatively large revision, but I think, against the global backdrop and how we'd been thinking about the economy, we have shifted that view quite significantly overnight. I think really there's two parts to that shift. I think for a long time, we've kind of viewed the RBA as being able to ease rates back towards something a little bit more neutral, around 3.1 on that, that kind of improving inflation backdrop. But we had been pretty cautious, as the RBA had, just given maybe some upside risks to the picture on inflation. But, what you've really seen over the recent week or so is kind of those shift from kind of the upside on growth on inflation to maybe the downside. And so in that first instance, we think the RBA is really going to, move back to that neutral stance a little bit more quickly. And then after that, getting down to that 2.6 from the 3.1 is actually about giving the economy a little bit of support as that uncertainty really flows through the economy over the next little while.
I know the environment's really uncertain at the moment. This market volatility, though, we're seeing overnight, the market surging. Does that add risk to your forecast, or does that volatility just add to support it? Because what's interesting is that we spoke to the team at Deutsche Bank just a few days ago, because they also said a 50 basis point cut as a result of all this volatility in May. But today, given the bounce back and Donald Trump pulling back on some of his threats, they're now saying, hey, hold on, not 50 basis points, 25 now in May.
Yeah, that's right. I think, any forecast at this point is quite uncertain, just because we don't know the actual magnitude of the tariffs in place and how long they'll sort of persist, but also even what the channels are and the magnitude of the flow through to the economy. So I think, the answer is a little bit of both. I think, that uncertainty, the tariffs are paused for 3 months, but that's 3 months more of uncertainty, and we don't really know what happens yet. So I think for us, the risk here is that businesses go on pause, right? Like, we've already seen business investment slow kind of over the last year. It'd been quite healthy through the pandemic with the government support we'd seen, but it had slowed over the past year or so. And I think, that's the risk. Business investment in Australia had been quite weak pre sort of pandemic. And, do we kind of return to that world with heightened uncertainty? And certainly for the consumer, we saw consumer confidence fall yesterday, even though it was surveyed a little bit before the actual full announcement of tariffs. And, we have seen a pickup in our spending data and consumption start to recover, but we're not quite back at where we think we should be. And so there is some risk there that we don't quite make it back to trend growth this year.
And just finally, if it's so important to cut rates at potentially 50 basis points in May, why wait until May? Why not the RBA do it sooner and hold, say, an emergency meeting?
I think we're not in an emergency situation, let's say. I think, to be clear here, we're concerned about growth and the risks, but we see the opportunity for the RBA to provide some policy support as opposed to kind of really reacting. I think we need a bigger sort of shock to see an emergency meeting. We have seen those previously. I don't think we're quite in that world yet, right? Like what we'd be looking for there is, maybe some bigger sort of panic in financial markets or liquidity or sort of credit event. Certainly the RBA is concerned about the economy continuing to function and credit continuing to flow. And so for now, we haven't seen any disruption to that. So I think the RBA can afford to wait amidst some of that, very high uncertainty. They do need to reassess their position a little bit on how tight the economy is and where the starting point is, and also just try and get a grasp of where policy is going and where the magnitude of the tariff and the impact on Australia is. So for us, I think the bigger gap we now see between the RBA meetings means they are more likely at the margin to do larger moves just because of that gap. They don't have the flexibility anymore of doing something 1 month and waiting it to see and then doing a little bit more the next month. But really, I think, that need to shift the stance of policy and possibly get there relatively quickly is why that they're going to do that kind of first 50 basis point move.
That's Gareth Spence there, the head of Australian economics at NAB. Don't forget, if you enjoy the podcast, to give it a rating or a review on Spotify or Apple Podcasts and to click subscribe.
This SBS On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.